has evolved into what it is today, which was a vision of having a one-stop shop.
You hire the best of the best.
Yes, we do. Everybody here to me is family.
Our guiding principles are:
be kind,
speak honestly,
make it simple,
act fairly,
put people over profits. Simple solutions.
Well, good morning, everybody in Wildcat Nation. I'm here with financial expert Bruce Porter from the Resource Center, 882-1800, right here in the Resource Center studios at K-ROG. Resource Center is one of our major sponsors at K-ROG, kind of making it happen for us.
Hey, glad to do it. I tell you, this is a good thing for the local community. K-ROG is going on now, I can tell you that.
It sure is a lot of fun. And
you know what I like about it?
What do you like about it?
We like to get good information out to the K-ROG community.
We sure do.
Rogersville folks need good information, and that's what we're trying to do with K-ROG. And you know what? We appreciate all the support we get from the local community, but we want some ideas. If you think of anything you'd like us to cover on K-ROG, we need to know so we can get that information out to the community.
And you can email us at info@krogtv.com, or you can now call at 417-343-6640, the K-ROG line.
Yep.
417-343-6640 if you'd like to call in and give us some suggestions on K-ROG. We'll be happy to hear. You'll probably get voicemail because
it's just going to keep getting better and better.
It sure is. So, Bruce, what have you got for us today? We're going to talk taxes, huh?
Well, it's tax time. Everybody's kind of getting ready or in the process of doing their taxes. So I think there's some things we want to discuss that'll maybe help you figure this stuff out. A lot of people moving a lot of money around during tax season. If you need an IRA, a lot of people put money in an IRA for a deduction on their taxes. And, we offer that at the Resource Center. We stay pretty busy during tax season, either making withdrawals to pay taxes or people coming in to buy an IRA and, try to get a little bit of a deduction to save on their tax liability.
Sure.
So there's things that I want to talk about. The IRA limits for this year. So if you're just average guy and family and you're looking to put money in an IRA, if you're under age 50, you can put $6,000 in an IRA. Now, that's a tax deduction, so that lowers your taxable income by $6,000, which allows you to take a deduction on your tax. So if you're going to be getting a refund back, you might get a little bit bigger refund back by putting money in an IRA. And that's the whole concept behind putting money in qualified retirement plans. You get the benefit of the tax deduction. You get your money in there growing tax deferred, and effectively it saves you some on your taxes or increases your return. So that's an idea. If you're a small business and you have a SEP IRA, which is a simplified employee pension, or a simple IRA, which is some small businesses have those types of plans, there's contribution limits for those. Now, a SEP IRA, 25% of compensation. So if you're at a level in your professional career and in $6,000 or $7,000 a year is not enough to retire you, you can put up to 25% of your annual compensation in a SEP IRA. The maximum limit's $57,000. So like an IRA, if you're over age 50, $7,000 is the limit. Well, here with a SEP IRA, you can put up to $57,000 in. So it allows you to put away a larger amount of money. Now, again, that lowers your taxable income. Let's say you're affluent and you're putting in $57,000 in your SEP IRA. That lowers your taxable income by $57,000. So that can be a big help. So, does that make sense?
It does make sense.
To an attorney?
Yeah, well, I don't know about that.
Okay. Simple IRAs, same type of concept. Under age 50, $13,500. Over age 50, $16,500. Again, lowering your taxes, taxable income.
So what we're really talking about are ways to invest your money now, but you do it through a special program that allows you to deduct that from your income so that you reduce your tax rate.
That's exactly right. So, everybody's wanting to pay less tax. Well, if you make a contribution into a retirement type account, which is what all of these are, this money is classified as retirement, right? So you got to comply with the rules and things like that. A lot of people have a 401k or a 403b or 457 or at work, right? I always encourage people to take advantage of that. Huge, huge benefits to taking advantage of what's offered at work.
And obviously it's always going to be a benefit because it's going to save you on taxes. But what just occurred to me is if that's going to make the difference between your tax bracket.
Absolutely.
I mean, you could actually lower your tax bracket if you happen to be on the bubble would be a really good thing for.
Yeah, if you're on the bubble of say you're in a 12% tax bracket, and I believe that limit, income limit's about $80,250 or something like that. If you're $1 over that, you slide up into a 22. So that's the huge step is this middle income from 80 to 81,000.
Yeah.
You go from 12% to 22.
Yeah, and just
if you put money
put a grand in there if nothing else. And
I mean you could put whatever in your qualified accounts, whatever contribution you want. But if you're doing that, you could possibly lower your taxable exposure on all of your income by just making a contribution. So it makes a big difference.
Absolutely.
We have a viewer question.
Yeah, that
was really interesting.
I was just going to get to that. Can I convert my RMD? What's an RMD?
Required minimum distribution.
Yeah, RMD to a Roth IRA and satisfy the RMD requirement in the same tax year?
Wow, that's a good question.
It's a great idea.
Yeah.
Why not? Because you're paying tax. I mean, you withdraw it, you pay taxes, and so it's
right. It's a really great idea, but you can't. So let's break this down. So the answer is no, you can't do that in the same tax year, and here's why. A Roth IRA is a separate investment, right? All right. Then you got your qualified monies and like a 401k, 403b, a typical IRA, whatever it may be. So now let's say you're wanting, you're at the age, which the age right now for required minimum distribution is all based on your age. That's at age 72. So evidently this guy's 72 or 70. It used to be the rule, 70 and a half. So now let's say I can see what he's trying to do. I want to convert to a Roth rather than take that taxable distribution. Well, you can't do that because a Roth conversion is actually a rollover of taxable money, like IRA money. So now when you think through that, you've still got the investment deferred, still growing, but by converting to a Roth, you eliminate future RMDs on that money. You eliminate taxable exposure on that money. So it's a great concept, but the IRS doesn't allow it because you're rolling it over. Now, that doesn't mean you can't go ahead and take your RMD. So if you just took your RMD and then made a deposit into a Roth, well, you got to comply with your limits. So you could only put $7,000 in a Roth.
Because I was about to ask you, what if I get to age 71, I just roll over my entire traditional IRA into a Roth IRA?
You can. You just have to pay the tax liability on all of that money. So, $100,000, let's say, and let's say you just want to convert it all to a Roth for future tax-free income. Well, remember the rules. You roll it over, right? You got tax exposure on $100,000. All right. Then you got to leave it in there for 5 years.
And that's at my current tax rate, right? So if I had a really horrible 2020.
And it's going to possibly jack your tax rate up.
But my tax rate in 2020 is low because I didn't make any money. That might be a good time to do something like that?
It is a good time to either do all or a portion. Now, you don't have to do all. So, a lot of times we'll have people come in and say, my RMD is this, and I've got this much in my IRA. I'm going to start converting a little bit of that every year so that in the next 5 or 10 years, I've got all my money out of my traditional IRA qualified account into a Roth account so I can have future tax-free income.
I like that a
So
lot.
it's not an all or none situation. You can do partial conversions and things like that. So again, all this stuff can get pretty convoluted. So that's why we're here at the Resource Center.
why you're
is
here,
to
Bruce.
try to help. And we don't have all the answers, but I do surround myself with people that are pretty knowledgeable. I have good legal advice with the Worsham Law Firm, and I try not to be my own attorney. You've advised me on that several times.
You're just you're about as good practicing law as I am at managing money.
There you go.
So
that's what we're doing at the Resource Centers, trying to help people, trying to be a resource for them. So that's the key to the whole deal.
Thanks again, Bruce. Thanks everybody for watching. We'll be back next week with more dollars and cents.
Investment advisory services offered only by duly registered individuals through AE Wealth Management, LLC. AE Wealth Management and the Resource Center, Inc. are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet a particular need of an individual situation. The Resource Center, Inc. is not permitted to offer, and no statement made during this podcast shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein, provided by third parties, have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by the Resource Center, Inc. This podcast is a paid placement.